we certainly say stimulus a lot, and we see it in all the news articles written about the market action over the past week, Jason, and it is important, but there's a lot of things going on. There was the Regeneron news, the president, there's a lot of things swirling around. We had jobless claims, we've got a GDP number coming. What is really the market keying off of now? I mean, Powell, too, we don't want to leave him out, saying that, hey, we could overshoot, but we'll use the money somewhere. I mean, why is the market trending higher?
Yeah, Joe, in my opinion, there's been obviously almost endless talk about the stimulus, and it seems to me that almost regardless of what the news is, the market goes higher. So I'm largely of the view that the stimulus isn't really the issue. And I think my own opinion is that Chairman Powell's speech earlier in the week, which largely got the Fed into the political game, and also largely encouraged the fiscal side of the government, really, which is not something the Fed should be doing, in my opinion. To me, that's the biggest story of the week for the markets. Now, you're also seeing, obviously, a rotation into some of the cyclical names and some of the value names, so I also think there could be a certain part of this, which is the idea that generalized lockdowns are too blunt a tool, and that from now on we're going to have more localized lockdowns if there's a problem. I think that's also very, very important. So, I mean, it's the combination of those things. I also think just the fact that we're going to have some resolution, Lord willing, of this election. To me, those are the things that are really driving the market. I think the stimulus talks, it's hard to ascribe that to be a major driver of the markets, given what we've seen, really, not just over the last 2 weeks, but over the last couple of months.
The election is coming up. Obviously, no matter what we do, and I don't know how quickly we find out either, but there's been a lot written about stock market action before an election. And with an incumbent, if the market's positive, it's usually good for the incumbent, but I don't know, with COVID and everything else, I really, and stimulus and more, potentially even more stimulus with even if there was what some people call a blue wave, I'm not sure the market's telling us anything right now. Do you think it is? And September was not necessarily positive either for the incumbent, but it's better now.
No, Joe, you're absolutely right. The metrics that we normally look at, market-based metrics that we normally look at, actually give the president a slight edge, about 51%. Okay. On the other hand, we have portfolios that are designed for a Democratic win, or a Joe Biden win, Vice President Biden win, or a President Trump reelection, and those are giving a 70% chance of Vice President Biden winning. So there's something in terms of just the internals of the market, the industry groups like green energy and so forth, the things that are doing well. Generally speaking, the direction of the market, personal income, and also GDP are pretty good indicators of whether the incumbent gets reelected. And all of those things are in the president's favor. Obviously, this is a pretty different year, and there are a lot of other things going on. My own opinion, I know there's been another narrative going around that a blue wave would be better for the market because you'd get more stimulus. I think the only problem I have with that is that under the Biden plan, there would be very significant tax increases on income, corporate profits, estate taxes, capital gains, dividends. And it's hard to see that, frankly, from my point of view, as being particularly positive for either corporate profits or for the market as a whole.
Shepard Smith here. Thanks for watching CNBC on YouTube.